What if I told you that the same country that grows the coffee in your cup right now is also building Africa's largest dam? That while you see news about conflict, Chinese factories are quietly doubling production here. That Ethiopia has been growing faster than China for 5 of the last 10 years? Welcome to the ultimate investment paradox of our time. Today, we going behind the headlines to answer one critical question. Is Ethiopia in 2025 the smartest emerging market play or the most dangerous trap? Stick around. What we discovered is going to surprise you. Let me show you Ethiopia's dual reality. On one hand, you have what investors dream about: a government that's privatized telecom, open banking, built special economic zones with tax holidays up to 9 years, and created Africa's most attractive manufacturing hub for companies fleeing China's rising costs. And on the other hand, you have what keeps investors awake at night: currency controls so strict that getting dollars out can take months, bureaucracy that can make simple permits feel like ancient riddles, and a political landscape that's, well, let's just call it evolving. So which truth matters more for your money in 2025? That's what we're solving today. We've analyzed reports, spoken to investors on the ground, and identified the 3 sectors where the math actually works, and the 2 fatal mistakes that bankrupt newcomers. Let's dive into the 2025 opportunity matrix. Right now, smart money is flowing into 3 specific areas. Not because they're easy, but because the risk-reward math is undeniable. Opportunity number 1, the backdoor to Europe: manufacturing. Here's a fact most investors miss. Ethiopia has duty-free, quota-free access to both European and American markets. Now, combine that with electricity costs that are 70% cheaper than in Vietnam and wages at around $30 a month, and you start to understand why PVH, the parent company of Calvin Klein, and dozens of Chinese firms have moved millions of square feet of production here. The play isn't some sexy tech venture. It's the gritty, profitable make stuff for the world play. We're talking light manufacturing, textiles, leather goods, assembly. These are tangible products with established global demand. You're not creating a new market. You're just making the products in a much more cost-effective location. The government has supercharged this with industrial parks like Hawassa, which offer a one-stop shop for permits, utilities, and logistics, essentially creating a bubble of efficiency within the country. It's a powerful setup if you're in the business of physical goods. Next, opportunity number 2, the digital gold rush, fintech. Picture this: 93 million people. 60% of them are under the age of 25. And a staggering 75% don't have a traditional bank account. This is the perfect storm for digital finance. While the traditional banking sector is still protected and hard to enter for foreigners, mobile money and fintech have absolutely exploded. The government's Digital Ethiopia 2025 strategy is pouring fuel on this fire. Here's the key insight that many people miss. Ethiopia largely skipped the desktop computer generation and went straight to smartphones. The adoption curve is vertical. This means the infrastructure for a digital-first economy is being built right now on mobile. Companies that provide services like mobile payments, microloans, and digital insurance are tapping into a massive, underserved market that is hungry for modern financial tools. It's a genuine gold rush. And that brings us to opportunity number 3, the sustainable arbitrage, green energy, and agriculture. Now, here's something almost nobody talks about. Ethiopia has the potential to produce the world's cheapest green hydrogen. Its geography gives it immense hydropower, but its solar potential is 10 times its current capacity. As European carbon taxes continue to rise, a Made with Ethiopian Renewable Energy label could become a premium selling point, a mark of sustainability that commands a higher price. This isn't just about energy. Ethiopia is one of the most fertile countries in Africa. Think premium coffee, high-value horticultural products, and organic grains. The arbitrage opportunity is combining modern agricultural technology with this incredible natural advantage and a green energy backbone. It's about producing high-value, sustainable goods for a global market that is increasingly demanding them. This is the long-term, high-impact play. Now, before you get too excited and start booking your flight to Addis Ababa, we need to talk about the 2025 risk filter. These aren't deal breakers, but they are serious reality checks. Ignoring them is financial suicide. First and foremost is risk number 1, the dollar trap. This is the number 1 reason foreign investments fail here. You can be wildly profitable on paper, making millions in Ethiopian bear. But you need US dollars to pay for imports, repatriate profits, or pay foreign salaries. And getting those dollars out is tough. The official process through the central bank can take anywhere from 3 to 6 months, sometimes longer. The unofficial solutions you might hear about on the street are not only risky, but can be downright dangerous. Smart investors don't just hope for the best. They structure their entire business model around this forex reality from day one. This means designing a business that exports more than it imports, earning foreign currency directly. It means operating within special economic zones that offer forex retention privileges. You cannot treat this as an afterthought. It has to be your first thought. Next is risk number 2, the partnership paradox. Everyone, and I mean everyone, will tell you, you need a good local partner. And they're right. But what they don't tell you is that a bad partnership will destroy your business faster and more completely than any government policy ever could. We've seen it time and time again. A great business idea, a solid market, ruined by a partnership that went sour. We've identified 3 green flags and 7 red flags for choosing Ethiopian partners that could literally save you millions. The green flags include things like a proven track record, shared long-term vision, and transparent communication. The red flags are more subtle. Things like an overemphasis on political connections, a reluctance to put agreements in writing, or a history of short-lived business ventures. Finding the right partner is not a step in the process. It is the process. Finally, there's risk number 3, the timing window. Ethiopia is not a market for passive, set-it-and-forget-it investors. It's a dynamic, rapidly evolving environment. The window of opportunity for certain advantages is closing as the economy matures. Those incredible incentives in the industrial parks, they are gradually being reduced for new entrants. The banking sector? It's slowly, but surely, opening up, which will increase competition. You have to understand the 2025 specific timeline. The advantages that exist today might not be there in 2028. This requires active management and a strategy that anticipates these changes. You need to be nimble and ready to adapt. The best time to plant a tree was 20 years ago. The second best time is now, but you need to know which seeds to plant for this specific season. So, where does that leave you? Let's put it all together in a simple 2025 Ethiopia investment decision tree. Ask yourself these 3 questions honestly. Question 1. Can I commit to a 7 to 10-year horizon? This is not a get-rich-quick market. If you're looking for a quick flip, stop here. Success requires patience and a long-term perspective. If the answer is no, this isn't for you. Question 2. Do I have deep, hands-on expertise in one of the 3 key sectors, manufacturing, agri-tech, or fintech? General business knowledge is not enough. You need specific, applicable skills to navigate the unique challenges and opportunities in these areas. If your expertise lies elsewhere, you should seriously reconsider your sector focus. And question 3. Am I willing to spend at least 3 months on the ground, building relationships and finding the right team before investing a single dollar? If you think you can do this remotely from a laptop, you are mistaken. This market demands presence. If the answer is no, this is not the place for your capital. Ethiopia in 2025 isn't for everyone. It's complex, it's challenging, and it demands more from an investor than almost any other market. But for the small group of investors who do the homework, who build real relationships, and who think in decades rather than quarters, this might just be the most asymmetric opportunity in the entire emerging markets universe. Now I'm genuinely curious to hear from you. Which of these 3 core ideas surprised you the most? The sheer scale of the manufacturing cost advantage, the incredible speed of fintech adoption, or the specific workarounds for the forex challenge? Let me know in the comments. Just type manufacturing, fintech, or forex and share your thoughts. I'll be jumping in and responding to the most interesting questions and comments personally. If you found this deep dive valuable, 2 quick things would help immensely. First, please hit that like button. It's a small click for you, but it tells the YouTube algorithm that this is the kind of detailed analysis that people want to see. Second, subscribe to the channel and turn on all notifications so you don't miss our next investigation into the world's most complex and rewarding investment frontiers. Thanks for watching.